Where leaders go, learning follows. At Harvard Business School, we offer in-person and virtual executive education programs on a broad range of business topics. This is where the brightest minds in business come together. Add your unique voice to an exceptional peer group. Come learn from others' diverse perspectives and from our world-class faculty. It's your time. Go. To apply, visit hbs.me/go. That's hbs.me/go.
And good evening. We're doing it live right here, weeknights in the 5 o'clock hour in Los Angeles. Mottek On Money, 5 nights a week for you, live on the air right here on 790 KBC. Streaming live online worldwide at kbc.com, and your on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, and all your favorite podcast platforms. Well, if you're stuck on the 10 freeway, that freeway closure in East L.A. not only affecting commuters but businesses throughout the area. We'll get an update tonight from Mark Wilbur, founder and a former chair of the Los Angeles Business Federation, LA BizFed, former associate dean of the USC Marshall School of Business, chair of Employers Group. He'll be joining us live later this hour to talk about that big mess there in East Los Angeles, impacting commuters and business here in Southern California. The stock market moving mostly higher today, but with a powerful November rally that carried the S&P 500 to its highest level in 2 months, hitting a bit of a speed bump today. The Dow pulling back 46 points. The other major averages, well, mixed. S&P 500 up 5. The NASDAQ composite actually moved up 10 points today as well. So the S&P 500 closing at its highest level seen since September 1st. The NASDAQ's highest finish since August 1st. Investors did take a breather today to digest some weaker than expected economic reports, and the rally that's carried the NASDAQ nearly 10% higher since the start of November. We are getting some more earnings news from retailers. Walmart, for example, Macy's, Williams-Sonoma, all coming in with gains, it looks like here, especially Macy's up nearly 6% today. Walmart, though, pulling back 8%. Williams-Sonoma shares moving up 6%. Taking a look at some of the other names making news today, shares of Alibaba, that's the big Chinese company with shares listed here in the U.S., down 9% after that company posted solid earnings but issued a warning about the impact of U.S. export controls. This as President Biden met with the Chinese leader, Xi Jinping. Demonstrators, meanwhile, seeking a ceasefire in Gaza, blocked bridges on both sides of the U.S. today, including a major span into San Francisco during that global trade summit involving President Biden and other world leaders. 80 protesters ended up getting arrested on the San Francisco-Oakland Bay Bridge, and about 30 vehicles were towed after demonstrators blocked all the lanes on the upper deck, with some drivers tossing their keys into the bay. The United Auto Workers Union members voting to approve the new contract with General Motors, making GM the first Detroit automaker to get a ratified deal that could end a contentious labor dispute and a series of punishing strikes involving the UAW. Shares of ChargePoint Holdings, that's a familiar name for those with the EVs out there. The stock tanked more than 20% after hours today after that EV charging company lost its top executive and said its third quarter sales are well off the mark. The price of oil moving lower today by nearly $4. Big drop in the price of oil today, down nearly 5%, settling at $72.90 a barrel. We're watching, of course, what's happening in the Middle East, as you heard at the top of the hour with the very latest there. Also a debate, according to the Jerusalem Post, a debate at the highest levels of government and the IDF about whether the military should already begin its invasion of southern Gaza or whether this must wait for an interim deal on hostages, according to the Jerusalem Post. Well, Bitcoin rebounding today by more than $300, back above $36,000. Bitcoin has had quite a year so far. Let's talk more about your money, the markets, and the economy now. And let's bring in Ken WINANS, money manager and president of WINANS Investments, author of Investment Atlas 1 and 2, a terrific market historian, and also a Forbes magazine contributor. Ken WINANS, thank you very much for taking the call here. Mixed finish to the day on Wall Street after a pretty impressive rally here, and looks like bond yields pulled back a bit more now with the yield on the 10-year note at 4.45%. Bitcoin above 36K. Give us your view of things here at the moment.
Frank, it's going to be very interesting as we finish out the rest of the fall, because, I mean, statistically, I mean, if you could take these odds to Vegas, we would all be very well off. 70 to 75% of the time, you pick your index, whether it's the S&P 500, Dow, NASDAQ, or anything else, November, December, and January are basically very, very positive, even in mediocre and bad markets. So one of the things I've cautioned anybody I've talked to, or that I certainly have answered any of my Forbes articles, if there is a time to hold cash, it is not now. You should find things to buy into that are working. But also, with that being said, we're coming off of basically 22 months of nowhere near record highs in the market. And stocks that have been punished this year, I do think you're going to have a fair number of accountants telling their clients to harvest losses, meaning to sell out of things that are at a loss so you can book them for your taxes next year, or certainly for this year, but filing next year. So there's going to be some pressure on shares that have just not been performing. So if you're a momentum investor, you're not going to be getting caught in that trap. But clearly, if you're somebody who likes to value plays, just be careful. You might find it's a bit tough. The only other thing I would bring up, you talked about oil. I've actually spent a good part of this week analyzing commodity cycles because I'm very curious of how these typically act in the later phase, the mid to late phases of an inflationary run. And oil is acting the way you would expect it to. Demand pulls back, even in spite of what's going on in the Middle East and certainly in Ukraine. It's very, very seasonal. It's reduction in use. It's also that the refineries have enough crude to basically produce what they need right now. But keep in mind that as we go into next year, if the economy continues to be strong, you could expect oil prices to rebound pretty quick in January and February.
And, of course, a lot riding what happens in the Middle East with the current war underway. We're all nervously watching that. And we're on the air live with money manager Ken Winans. And as far as retailers are concerned, we're kicking off the holiday shopping season. In fact, they have the big kickoff tonight in Beverly Hills. Earlier this week, they had the big holiday season kickoff at the Grove here in Los Angeles. And we're scheduled to speak to the one and only Rick Caruso live on this program tomorrow evening. So stay tuned for that tomorrow night here in the 5 o'clock hour. And I see the earnings parade continue today involving the big retailers. Walmart had to do a double take on this after hitting a new high recently, down 8% today. It looks like comments from Walmart's chief executive indicated that he expects to see a U.S. deflation trend in the coming months. Deflation, not inflation. What's your reaction to that, and what are your thoughts about the retailers heading into the holiday shopping season?
Well, keep in mind that statistically, buying retailers during this time of year, when you talk about the so-called Santa Claus rally, it is because this is the time of year when retailers typically do well. You're going to find individual companies handling what's going on right now with mixed results. What I would say is this. The retailers who have really gotten a handle on their inventory control, they've gotten a handle on their cost structure. Certainly they have their employees lined up for the holiday season. I think they will have a very, very good holiday season overall. But, I mean, comments about deflation, I certainly don't agree with that or support that. It's certainly not showing up in the data. But I'd have to read all the comments to see what was said. But I just get the sense, and again, this is just as I talk to investors, I talk to members of my own family and friends, people are looking for a reason to be positive. And the fact that the stock market popped up as much as it did this November has made people just a little cheerier, Frank. They're ready to go out and spend a few extra bucks and try to enjoy the holiday after what has been a very, very weird year for most of us.
Absolutely. On the air live with money manager Ken Winans. We also heard from some of the Fed folks today, the Fed heads, Fed Governor Lisa Cook, for example, saying that inflation can keep declining without a sharp spike in unemployment, but warned that a soft landing for the U.S. economy is not assured. And the Cleveland Fed President Loretta Mester also making some comments, said easing monetary policy is just not part of the conversation right now. She told that to CNBC. Do you think the Fed is done raising rates here, Ken? That'll give us some reason to for holiday cheer.
Yeah, well, there's that, but I would also say too, there's a difference between not raising rates and lowering rates. And I don't, as much as we would, and listen, we all have wonderful memories of money that was free and there was zero interest rates. We're not going to see that world again. No, certainly not in my lifetime. Certainly, I think it's going to, for a lot of people listening in this audience. But with that, there's a difference between the Fed not raising interest rates and keeping them where they're at. I think that everybody who's planning their investment strategy, you need to think in terms of no changes next year to interest rates one way or the other. It's also an election year. The Fed is extremely cautious about ever being accused of influencing elections of any way, shape, or form. So I think they're going to hold pat. Now, where that could change, if we have some geopolitical event that makes prices skyrocket, that could be a problem, and that they would have to take action on that. The other big thing, and I think the more logical scenario, the later phase of an inflation cycle is what we call wage push. And, I mean, a good case in point, Starbucks is on strike right now. You're going to continue to have strike news all through next year, and I dare say it's also going to be on the public sector side. I think that when you start looking at the borrowing cost increases, especially at the municipal level, state, federal, county, local, their borrowing costs are going to radically jump next year, and it's going to put a real crimp in their budgets. And I think that people who are promised or thinking they were going to get pay raises are probably going to find they're not going to get them. So I expect that to be a common theme next year. The other big thing, and, there's not a lot of talk about this right now, Frank, but I have everybody keep this in mind. There's a lot of pressure right now. Investors are asking some tough questions of banks and investment firms. Why are your money market accounts still paying me less than 1%? Well, some politicians are beginning to catch in on this, and I mark my words, I think this will be an election issue next year. There might be some congressional testimony about why these rates are below T-bill rates. So there's just going to be a lot of crosswinds next year. But with that, there's companies that are on track. They're worth buying, and you just have to stay with your strategy.
All right. We're watching all the labor action this year, and you're right, workers at more than 200 Starbucks locations nationwide walking off the job in what they say was the biggest strike yet in the two-year-old effort to unionize Starbucks, which, of course, Starbucks opposes. What about Starbucks here? And it's also an economic bellwether. Would you be touching Starbucks given what's going on?
Well, Starbucks, it's kind of funny. It's a tough company because do you consider it a restaurant or a retailer? It's one of those kind of weird hybrids that those of us who like to try to put a company in an industry group. Starbucks obviously was a darling for a very, very long time, and then it lost its place on the mantle, fell apart, and then a lot of the value-type investors realized there was something going on there. The price action today was all over the place with Starbucks. I would say this. I'm more inclined to find the companies, the retailers, the pure retail plays that I think will do better. The other thing I'd bring up, I'm really surprised that the restaurant chains are not doing better. I'm hurt to see how many of them are in confirmed downtrends. People are not buying them, and it's just not what you expect when you think about Thanksgiving and certainly holiday parties across the board. But a trend that I'm continuing to hear over and over and over again, many people are electing to cook at home, have meals at home, have friends and family over, because quite frankly, it's cheaper. And I think you're going to find that to be the case going forward. But Starbucks, for me, I'm not buying it myself right now. But what I am buying are companies like Costco, TJX, or two holdings that I'm adding a lot to.
It could be information to change your life forever. Or the Something You Should Know podcast could just be something interesting.
Herb Cohen is one of the all-time legendary great sales trainers and negotiators. And he has some advice that will help you negotiate better. Make the other person feel superior and smarter than you. Care, but don't care too much. If you don't like the deal, walk away and see if the deal doesn't get better instantly.
Something You Should Know, wherever you listen.
I still like the auto-type retailers like O'Reilly and AutoZone. People thinking about their cars, you're trying to find something to buy for somebody, cars come into mind, people are holding on to their cars longer, so I expect those kind of retailers will do well also during the holidays.
All right, we got the LA Auto Show cranking up here, so people will certainly be hearing more about that, and we'll have our auto journalist specialist on who are attending the show and the previews and all that coming up this week as well as next week. And of course, heading into the Thanksgiving holiday weekend, the airlines also in focus very much. It looks like it's going to be record travel, but the airlines have been all over the place too. Ken, what about the airlines here?
Well, here's the problem with the airlines. I mean, a lot of them have actually reduced the size of their fleets, and it's getting tough because we're having the continued talk about delays in flights, canceled flights. So as you said, Frank, it is a real mixed bag with the airlines. I almost think you won't know until the dust settles from the holidays of which airlines are on track and which ones are not. But again, I personally am not touching the airlines right now. There's one other quick thing I wanted to bring up, and that you're dealing with fuel costs. That if the airlines actually did a good job on hedging their fuel costs earlier this year, we'll find those airlines will make more money than the ones that have just been buying energy at spot, as we say, at spot. And it's just, they've already queued up everything and they paid for it at a higher price. So you just brought up two groups right there. When I keep bringing up mixed bag, it is very much a stock pickers market. I even think industry ETFs, it's going to be very hard to find that will really capture the story. So again, the stocks that are going to be hot and others that are not, and it's going to be that way throughout the rest of the year. Frank, one other quick thing about tomorrow. It is option expiration Friday, and you could find there to be some very high volatility in the option markets. They were commenting earlier tonight on the news reel. There's $2.5 trillion worth of options coming due tomorrow. It's one of the highest levels we've seen in recent history. So don't be surprised if there's going to be things swinging all over tomorrow. And, of course, we have an accelerated week next week with Thanksgiving. So people are going to clear out those kind of trades. They don't want to go into the holidays with that.
Very interesting. We'll be watching for that. Thanks for flagging that one. And your look at commodities. What about gold here? And what about Bitcoin here, which has been on a roll?
Absolutely. You have to give credit to the Bitcoin True Blue. They really hung in with this. I would say this, again, Bitcoin, trend is your friend. You want to keep rolling with it. But I would also encourage those people that, there's other commodities you might want to look at. You mentioned gold. I was actually pleasantly surprised to see how gold and silver are both bouncing back very strong. A lot of it is demand, by the way, from the jewelry industry globally. So you're finding a lot of that going on. Also, quite frankly, the dollar. One of the great things that's happened this year, and it's actually interesting because you talk to people about emerging markets, but the reality of it is the dollar is being relatively strong, but not overvalued, has helped our economy a great deal, and it's taken pressure off the Fed. They just need one thing not to worry about, and a currency falling out of bed is not one of them, which was a big problem in the 1970s. They're not having that problem today. So, again, anything that's based in currencies, metals, I'm just finding a lot of bullish patterns that make sense for people to consider buying into. One other quick commodity play, and this is for people who might not necessarily have a commodity futures trading account, but you can buy the ETF. Soybeans are on the rise right now. There's a fund called, its symbol is SOYB. You might want to think about that if you're looking for a pure grain play. That makes sense right now. But again, seasonally, a good time to look at these kind of plays.
All right, we want to use the old bean here for a moment and talk about AI here, which is a big subject of conversation at that APEC conference in the Bay Area. And you're right there in the thick of all of that, Ken. What about the AI names here?
Well, obviously the promoters of AI, which is a big bulk of Silicon Valley, they've been trying to, again, they're very concerned about overreaching regulation. And then, look, we all worry about that. We don't want the government to stop progress, but at the same time, we don't want things to go out of control. I'm actually in the process right now of writing another Forbes piece, and one of the things I commented, I'll just say this very quickly, one of the things I commented on is not so much concerned about AI itself, but I'm very concerned about the data, the actual data, especially in my industry, the financial service area, that the machines, the analogy I would use, an old combustion engine, hey, you might have one heck of a great sports car, but if you have bad fuel going to that tank, that car is not going anywhere. So I cautioned that our industry has got to do a much better job of policing the raw data that feeds those AI engines, or I dare say we could have some strange redos like the flash crashes of 2010 and certainly the 87 stock market crash. So AI itself is fine, but there's other things that we have to tighten up. And I'm hoping the regulation will lay out some of those kind of protocols.
All right, Ken. Wish we had more time, but we'll have to stop there. Ken WINANS, money manager and president of WINANS Investments, author of Investment Atlas 1 and 2, and Forbes magazine contributor. We'll be looking for your next article in Forbes. Ken, thank you very much for taking the call here tonight.
Thank you, Frank. Take care.
You too.
Bye-bye.
Thanks very much, Ken. Friends, people like you and me have our ear to the ground on all things business. We like to be informed and well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well. Even still, we can get caught off guard as people get so focused on their destination they might not have a plan if they're in an accident that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. 833-88-SHARK's the number. So if you're in an accident, you'll be ready to go with a strategy to make Clark Fielding your first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bicycle accidents. Call this number, 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here on 790 KABC. Good evening. Mixed finish for the stock market today with the Dow pulling back 46 points at 34,945. The S&P 500 managed a closing gain of 5 at 4508. The NASDAQ of 10 at 14,114. The yield in the 10-year note, which impacts those fixed-rate mortgage rates, easing a bit more today to 4.45%. Gold at $1,987.30 an ounce. The price of oil tumbling today down in New York, down nearly $4 to settle at $72.90 a barrel, down nearly 5%. And Brent crude, the global benchmark, dropping nearly $4 to $77.42 a barrel. At Southern California gas pumps, prices, of course, still stubbornly high, eye-poppingly high for those who are in from out of town. Yep, look at that, regular $5.14 a gallon on average here in the L.A. Long Beach area. Premium up there at $5.50 a gallon on average, and diesel is at $6.02 a gallon on average, according to today's AAA fuel gauge survey. Bitcoin at more than $300 now at $36,353. Ethereum up 22 at $19.78. Doge at 8 cents. Amazon pulling back by about a half a percentage point, I should say. The company detailed plans to launch online vehicle sales next year, starting with Hyundai and looks like CarMax, Carvana, both of those stocks moving sharply lower by about 5 to 6%. Macy's among the winners today, up nearly 6% after the department store chain reported a surprise third-quarter profit that beat analyst expectations. Mottek On Money continues here on 790 KABC. Well, there's some good news if you're stuck in traffic in East Los Angeles right now, especially on that 10 freeway, which was shut down last weekend after that fire underneath the freeway. Governor Newsom has just announced that the 10 freeway in downtown Los Angeles will be reopened by Tuesday next week. The original estimate had been 3 to 5 weeks, but he just said Tuesday will be the day it'll be reopened. It turns out they won't have to tear down that part of the freeway, but will be reinforcing it somehow, and it will be reopening on Tuesday. So that is definitely good news. We'll talk about it, and we'll talk about it with Mark Wilbur, founding member and former chair of the Los Angeles Business Federation and former associate dean of the USC Marshall School of Business, coming up very shortly. But first, let's talk about what's happening in San Francisco as President Biden met with the Chinese leader. Taxpayers are being reminded that President Biden wants to increase the U.S. corporate income tax rate to a level higher than communist China. That reminder coming to us from Grover Norquist, the president of Americans for Tax Reform, who joins us live here right now. Grover, thank you very much for being such a terrific watchdog for all of us taxpayers here. Take it from the top and tell us about what's being proposed here.
Well, remember when the American corporate income tax was 35% just before 2017, when the Republicans reduced it to 21%. At that time, China was at 25%, and they also had a 15% rate for things they wanted to be more competitive on. So we were at 35, China was at 25, and then we wondered why we couldn't be more competitive with China. So the Republicans took it down to 21. Well, Biden doesn't like 21. Biden wants to take the American corporate rate, the federal one, up to 28. Remember, you have to add 4% because that's the average corporate rate at the state level. So you're really looking at 32. So Americans, if Biden gets his way, will pay 32% corporate tax compared to China, 15 and 25. It just makes us less competitive in the world, and Biden wants us to compete in dealing with China by having lower wages not lower taxes. And I tend to think we'd be better off competing on lower taxes and less regulatory burden, not lower wages.
And remember what happened prior to 2017, that we had a lot of U.S. companies going to Ireland and offshoring themselves, right, in the face of what you just described.
Half redneck, half posh. 100% fun. Trey Croward and Corey Ryan Forrester try and learn fancy culture in Putting On Airs.
The host of the Medium Popcorn Podcast, Brandon Collins and Justin Brown.
Okay, so Paddington 2 had like 100% on Rotten Tomatoes for years.
You guys ruined that?
Justin came in and took it down 2 points because of his rating. That's the time we started getting death threats.
Yeah, I'm not surprised. People worship that movie.
Putting On Airs. The podcast is on YouTube and wherever you listen.
The LASIK Vision Institute offers free virtual consultations. That's all your questions answered, all from the comforts of home. So don't wait. This simple 20-minute call can start your journey to 20/20 vision. Right now, the LASIK Vision Institute's offering $1,000 off their Wavelight laser when treated in November. That's $500 off per eye with guaranteed financing. So visit mylvioffer.com now. Must mention this promotion to be treated in November of 2023 to qualify. $1,000 off for both eyes on standard Wavelight price. $500 off for one eye. Cannot be combined with any other offers. See details at mylvioffer.com.
You think that's going to happen? Something like that's going to happen again?
Well, it can. You're right. It's not just China we compete with. The Irish were at 12.5%. Hungary at 9%. Some of the Eastern European countries also down around 12 to 15, lower rates. Our friends in France had a lower corporate rate than we did. They were at 25. So we were not competitive with the rest of the world. We got more competitive, not completely. We're not best. I'd like to be best. But 21 is sort of where Europe is in general. And taking it up to 28, and again, add 4% for the state corporate income tax, we become less competitive with all of Europe and with China.
That is really something. So, since you're right there with a front row seat there in Washington, how likely is this, given the new Speaker of the House on the Republican side? What's the outlook for all this?
The Republicans will stop this. The Republicans have a majority in the U.S. House of three votes, but almost every single Republican has signed the pledge never to raise taxes. So they will not allow that rate to pass as long as the Republicans control the House. It will take 60 votes in the Senate, and therefore, while the Republicans don't have a majority in the Senate, they do have enough votes to stop a tax increase. All bets are off if Biden were reelected with a Democrat House and a Democrat Senate.
All right, looks like we won't be talking about a government shutdown this week. Can you give us an update on what just happened there this week related to that last minute measure that was just passed?
Sure. The Republicans in the House agreed, and then the Senate, the president are agreeing with them to say we're going to go 75 days from now before we revisit this. The reason that's important is we could have been negotiating the entire budget between now and Thanksgiving, between now and Christmas. And, people don't make very good decisions when they really, really, really want to be somewhere else for Thanksgiving holidays or Christmas holidays. So moving it after those two dates will give us a real chance to sit down and have a public discussion. Who's going to follow the news and ask who did what in the 5 days before Christmas, okay? Politicians do a better job when people are watching. That will be possible after Christmas.
And the answer to the question, of course, you'll be asking.
The question I'm going to be asking?
Yeah, is who did this? If anyone's going to ask those questions, you're the watchdog, certainly.
Absolutely. I think we'll be able to keep a better eye on spending. The Republicans have said that we're going to give Israel $14.5 billion for weapons, and we will pay for that by reducing the money that Biden wanted to give to the IRS by $14.5 billion. I think that that's a good way to pay for spending emergencies, things that are not in the normal budget, by reducing other spending. And to the extent that the Republicans can maintain that as a rule, we will be much better off, and emergencies will not be excuses to waste money.
We're on the air live with Grover Norquist, president of Americans for Tax Reform. And another important story here I see on your website, Democrats are attempting to use the federal government to control rental prices that are normally dictated at the state and local level. The Biden administration's so-called Renters' Bill of Rights discusses imposing price controls nationwide by capping rent at no more than 30% of household income on housing costs. What's the outlook on that one?
Well, it was said by a Swedish left-wing economist that rent control is a more effective way to destroy a city than carpet bombing. And usually in the United States, this only happened in particularly silly cities, New York City, San Francisco, Cambridge, Massachusetts. Our friend Mr. Biden wants to impose this nationally. I don't see how constitutionally they can do it. I don't see how they can pass it legislatively. I don't think it can be done by executive order. But Biden has tried a lot of things by executive order that you might not think are possible, but you still have to bat them down. You still have to go to court to kill them.
And as you've noted here, rent control will raise demand for housing and therefore rents in other areas that we've seen. So we'll continue to stay on that one. Thanks for highlighting that important issue here on your website, which, of course, is Americans for Tax Reform. Grover Norquist, thanks very much for taking the call with us here tonight.
Good to be with you.
Thank you very much, Grover. That is America's leading taxpayer advocate, Grover Norquist, the president of Americans for Tax Reform. Live with us here on Mottek On Money on 790 KBC. Mottek On Money continues here on 790 KBC. Here's some good news. If you're stuck on the 10 freeway this evening, they just held a big news conference, and Governor Newsom announced that the 10 freeway will reopen in East Los Angeles next Tuesday. Well ahead of what they originally predicted earlier this week, Newsom said engineers had evaluated the integrity of the pillars that safely elevate the heavily trafficked roadway following that big fire under the freeway last weekend, and they determined that they would not need to demolish that portion of the freeway, rather than it could be somehow shored up and repaired. The original estimate was 3 to 5 weeks, but they just announced at a news conference that the freeway will reopen in downtown Los Angeles area next Tuesday. That is good news for commuters as well as for business people who have been impacted by this freeway shutdown since last weekend. Let's bring in Mark Wilbur now, founding member and former chairman of the Los Angeles Business Federation, LA BizFed, former associate dean of the USC Marshall School of Business, president and CEO of Employers Group. And Mark Wilbur, great to have you back with us here. Obviously, this is very big news affecting commuters and commerce throughout this whole region. Give us your reaction, first of all, to this big news that is just breaking this hour.
Great to be back, Frank. Nice to hear your voice and be on your show again. It's actually great news, and I hope it's true. I mean, it's one of these things where I know they're rushing diligently to try and get this thing open because it's a major artery in Los Angeles. There's no question about it. And without the ability to be able to use that section of the freeway really puts a burden on a lot of people. It'll be interesting. I would really love to see the results of that engineering study, just because that fire was very intense. I just want to make sure it's safe because there's more than 300,000 commuters a day go through that section of the freeway. So you can imagine if any kind of a failure was to happen there, we're talking about, hundreds of people potentially injured or killed. So it's really one of those things that I just want to make sure they don't rush so much that they ended up putting people in danger.
We'll certainly be very vigilant for all that and watching how this all comes together. But certainly next Tuesday is better than 3 to 5 weeks. So that is certainly some good news here. In the meantime, what's your reaction to all that stuff that was stored under there and this fire and apparently deliberately set and these homeless encampments throughout the area, including under many freeways? Obviously, a reminder of what's going on out there.
Gosh, Frank, you and I have lived through so many little mini disasters in Los Angeles over time. And it's one of those things where the finger pointing starts immediately before you even have answers or investigations done. The fingers are already pointing at people. But the Apex shot back today. It was very interesting that The fire marshal had been out there as recent as like a month ago. There had Caltrans had been out there as recent as a month ago, and not too long ago, I guess the fire marshal had been out there and reviewed things. So I know there's contractual issues that are, the mudslinging is going in both directions on that one. Apex has finally started to chime in to some of the media outlets and trying to, say, hey, wait a minute, before you start pointing too many fingers, you guys are complicit in the process, because if they've signed off and they've had the fire marshal out there, you've had Caltrans out there, and they've known about this going on for years, and they haven't paid rent for over a year, yet they've allowed that to continue on while they're charging tenants. I mean, at some point, Frank, the government has to take some responsibility there. So they should be careful about how much mud they want to sling at Apex right now. Isn't that something? Remember, was it last year we were talking about the rail yard there that was that all those trains are broken into? Has anybody taken a look lately at what's going on there now? Remember when that was such a big story, when just before the holiday season, all those train robberies and break-ins? Is that happening again? I remember, if I remember, Frank, you were the one that broke that story. I mean, I know that one guy took the photos and put it online, but as far as radio goes, if I remember, as you and I we were on the front of that whole thing, sir. And it was amazing. There were so many break-ins going on. That's a good question. They did seem that they put some things in place to curtail the ongoing onslaught of breaking into rail cars. I mean, there's tons of video. The response team is completely different now, the whole process. But you and I both know if they arrest anybody, they'll be back out on the street under George Gascon in 5 minutes. So it may not matter anyway. Before I lost my thought of train, I thought I would mention that. And remember, we had that conversation when all that was happening. And here it is, the holiday season. Again, it's been a pretty fast year. And your fan club gathered here on the air recently. We had Kevin Harbour, the president of the BizFed Institute, on talking about they had a big job fair recently and a big job-related event. And I haven't talked to you since the latest job numbers came out. But among the movers and shakers you talked to here, what's your outlook on jobs and the economy here at this point? Well, I think, what Grover brought up, your previous guest, is really a critical item. I mean, if you suddenly move the tax rate up, 6-7 points onto employers, again, that's going to cause more problems. That's going to cause more inflation. That's going to cause, where do people think companies, are going to get the revenue they need to grow and then reinvest and to reinvent themselves? And if it's being sucked out by higher tax rates and making us less competitive nationally and globally, it's a real problem. And so don't look for the jobs thing to improve. But I feel like, Frank, with the nonstop interest rate increases, which hopefully have stopped or will even come down maybe a little bit, we've really put ourselves in a box where we're really not very competitive right now on a global basis. I mean, our economy has been incredibly resilient to some of the punishment we've put it through. But I kind of get the feeling, and I think you've heard it in some of your other guests, I don't think our economy can take too much more punishment without a major correction. And, of course, we had that hot labor summer, and the fallout continues. Finally, Hollywood is set to get cranked up again. What's the mood out there that you're picking up? Well, I was certainly happy to hear that deal get signed for not just the industry itself, but all of the ancillary businesses and industries that support it. I mean, people don't think about all the food trucks and everything else that live and feed off of, that industry when they're shooting and working in the middle of the night. So it's nothing but been positive news on that front. If nothing else, everybody feels a little lighter in their step right now, because we don't have some of those labor agreements going on. Some of them are still going, as you know. Yep. I mean, that whole fight with the hotel industry is still going on. And I feel like the Biden administration just keeps pushing for more animosity. You got the auto workers that still are not in agreement yet. It's such a tough time to do a strike right now, Frank, because the economy can't support it. Mark, thank you very much for taking the call live with us here tonight. Mark Wilbur, President and CEO of Employers Group, founding member and former chairman of the LA BizFed, and former associate dean of the USC Marshall School of Business, live with us here tonight. Stay tuned now for the 790 KBC News Blitz with our legal eagle, Royal Oak, straight ahead on 790 KBC.
half redneck, half posh. 100% fun. Trey Crowder and Corey Ryan Forrester try and learn fancy culture in putting on airs.
The host of the Medium Popcorn Podcast, Brandon Collins and Justin Brown.
Okay, so Paddington 2 had like 100% on Rotten Tomatoes for years.
You guys ruined that?
Justin came in and like took it down like 2 points because of his rating. That's the time we started getting death threats.
Yeah, I'm not surprised. I didn't know people worship that movie.
Putting on airs. The podcast is on YouTube and wherever you listen.